Okay, folks, welcome to Market Wrap for Wednesday, the 2nd of March, the year of our Lord 2022. All right, let's kick things off with the Fed. So, as expected, the Federal Reserve is going to latch on to this Russia-Ukraine war with a vengeance. It was their gift from God. So that way they don't have to be aggressive with raising interest rates. They're still going to go for a quarter basis point rate hike. And they killed any idea of a 50 basis point rate hike. What does this mean? It means nothing. It means absolutely zero. It means exactly what I said on the TrendSpider presentation, which I recorded at the beginning of February. I said they were going to kick the can down the road. They were not going to do 6-7 basis point rate hikes in 2022. They would find a reason. They have their reason, and here we are at. So what did stocks do? They rallied. It's not going to last. It will not last. Why? Inflation. You know, I have little doubt that Ukraine was the next crisis for the government, both in the EU and in the United States, to turn to draw people's attentions away from COVID and the absolute and utter psyops that it was. So they figured we need to get people's attentions away from COVID and onto the Ukraine, have them look overseas. I've always said this, that when policies are not popular at home, what do? You start a war. But here's the outcome. And I honestly believe that they didn't even know what was going to happen. I believe that they believe in their, meaning the EU in particular, and to a lesser extent here in the United States, I believe that they think that their green initiatives are going to carry them to the promised lands, and they're nowhere near where they should be with renewable capacity to be able to replace oil, natural gas, etc. In fact, the Germans are now extending the lifespan of their nuclear reactors. So while they wanted to take people's eye off the ball and have them focus on events foreign, all politics is local. And the unintended or intended consequence is this. Energy prices are going through the roof. And when people start paying nationwide $4 a gallon for gasoline, they're not going to give a hoot about Ukraine. They're going to be caring about, hey, how am I going to fill up my gas tank and pay my mortgage and feed my family? Let's go to the charts. Okay, Salesforce.com, we went into the day with a position. It was an earnings trade. They reported after hours yesterday. We booked those profits. I don't know what our profit was on a percentage basis. We got out at a nickel. We were paid, I forget, 81 cents on average, something like that per contract, and we got out at a nickel. So a decent, very decent profit, whatever that math is. So that's off the books now. And let's go to the bond market. I have a few stocks at the end I want to talk about that look really, really good. 10-year yield. Big move up higher today. Why? Russia is talking ceasefire. I believe they are meeting now for peace talks. So hopefully those peace talks will bear fruit. But this is a big move up higher. Whereas for bonds, I mean, my God, this is a counter-trend rally. We rallied right up into the 50-period moving average, which acted as a declining ceiling, and today we rolled over. So remember this. Remember this declining 50-period moving average and how it acts as a declining ceiling when we go through our other charts, and in particular, our positions. The tips. Treasury inflation-protected securities. They pulled back some. Why? They were overbought relative to the third standard deviation Bollinger Band. No great shock. Any pullback, they should be bought, because inflation is going up higher. Fed Chair Powell, in essence, said, we're not fighting inflation. And you may be saying, you know what? He's going to be raising rates a quarter point every single month for the next 2 years. It doesn't matter. It's too little too late. If he raised the Fed funds rate up 5%, he'd be at 5.25% on the Fed funds rate. That's the borrowing cost for banks to borrow from the Federal Reserve. Inflation's running at 7.5%. So net, inflation is still far outpacing his game plan for rate hikes. The dollar, daily chart, bearish key reversal bar. Volume was light. Stokes still look good, but man, I'm telling you right now, if we don't break out to new higher highs and we break down and put in the double top here and put in a lower high, the dollar is probably done. I mean, we've seen this before. We've seen this lower high like this, and it didn't end well. What was it? The Dow Transports, most recently. Small caps. Now, the U.S. dollar. It doesn't end well because look what happened to the small caps. Yes, they've had a counter-trend rally, but don't forget about the declining 50-period moving average. Since we're on the small caps, we don't have to come back to them. Stokes is still rising. RSI rising back above the 50 mark. We recaptured support. A lot of resistance in here. We'll see what happens. Volume light, not impressive whatsoever. The VIX. Bearish key reversal bar. Where I am betting man, it looks as though we're going to come in further here. That's my guess. The Dow Transports, big move up today, up over 2.5%. Did we break out? Let's get our crayon out. No, we were rejected. RSI is broken out. The S&P 500, daily chart, up over 1.75%. We recaptured support. Volume was okay. Let's update this. Get our crayon out again. Let's update where our resistance levels are. And there you have it. The Dow Jones daily chart up over 1.75%. Take note, folks. The 50-day moving average is going to take out the 200-day moving average probably Friday, maybe early next week. 3,400 clear resistance. This can't be right. This volume. No, there's no way that's right. It's bad tech. It says 40 billion shares were traded today. It's got to be a bad tech. Let's refresh. Nope, still there. Technology, daily chart, up 2%. This is kind of bullish. We had broken out here on the 25th, failed to hold it yesterday, bounced back today. How was volume? A little bit light. Indicators are improving. Now keep in mind, as we talk about these charts, keep an eye on the declining 50-period moving average. Take note the 20-period moving average in green crossed below, down below the 200-period moving average. This is still technically a market that is deteriorating. Consumer discretionaries stopped at resistance, up on light volume. Probably one of my least favorite sectors because of inflation driving up the cost in food and energy, and those are staples, not discretionary items. Energy up on the day over 2.25%. My apologies. We are trading above the third standard deviation Bollinger Band. We're going to get a pullback here or a pause. Ever so briefly. Volume, very good. Emerging markets. All right, so Jeff had mentioned today that he had put on a long trade on EDC. I like that trade. I want to wait until as close to the end of the week to the week as possible, and then open up that position. I'm fine with it. I think the dollar is looking very weak. Why does that matter? For those that are listening on the replay, the reason is that emerging markets trade inversely of the U.S. dollar in general. Why? It's because emerging markets are highly indebted. Their debt is in dollars. When dollars weaken, it's like a tax cut. And don't forget, emerging markets are large commodity producers. They're exploited for their natural resources. What's going up right now? Commodities. So they're producing more. They're getting paid more. They're able to pay off their debt. Just like Brazil. Look at this move on Brazil today. Nice move. Up over 6%. Gold. Gold was down on the day on volume. And this is kind of like what we discussed, right? If there's a possibility of peace, there's going to be a certain amount of money that comes out of the fear trade, which is gold and the dollar and the bond market, and it's going to rotate into the stock market. What was down today? Dollar, bonds, gold. What was up today? Stocks. Money's always flowing somewhere. We just got to keep track of it. Let's talk about positions. GDXJ closed down on the day, but closed well off the lows of the day. This is still a very bullish chart. Volume strong. Nugget, daily chart, down on the day, but again, another day of where we were down and we closed well off the lows of the session. Now, if there's no headway with these peace talks and there's no end in sight, well, you could bet your bottom dollar you're gonna begin to see money rotate back into the dollar, back into bonds, back into gold, and nuggets should do well. But longer term, and prayers to God that we do get a ceasefire. Sure, these gold stocks will probably sell off, but I'm going to be buying them hand over fist because the Federal Reserve has told us, we're not going to do much about inflation. Okay, new trade today. The RSX, this is a defined risk trade for those that are new members. What's a defined risk trade? It's when you purchase an option, and that's it. You know exactly what your risk is. In this case here, we did purchase an option, a 70 delta, meaning we bought options that move 70 cents for every dollar that the RSX moves, but simultaneously, we sold a 17 delta, I believe. Excuse me, a 30 delta, 17 strike, all the way up here. So we got the options for cheap. So our risk is about $2,300, a very small percentage of our portfolio. If God forbid, this tanks and goes to zero, well, okay, we tried. But the risk reward here is incredible. I mean, the reward on the trade is very attractive relative to the risk that we're putting up. Silver, daily chart. A down day, but it closed off the lows of the day. Take note of the difference between, let's bring up the S&P 500, put it over here next to silver, and you have the 50-day moving average declining, the 200-period moving average flattening out, versus silver, where you have the 200-day moving average, which is still declining some. It's beginning to flatten out. That rate of change is really beginning to diminish now. But the 50-day moving average is picking up steam dramatically. It's a tale of two charts, two different charts. So this chart's looking very good. I suspect we'll head higher. If we get a pullback, we'll be buying more. Silver stocks, SILJ. We held the breakout point today. We held it. So good stuff. Gold money eked out a gain today. Probably going to add more here. Cal-Maine Foods eked out a gain, but folks, don't go chasing this. I've been saying this, showing topping action. So just be careful here. It's a little bit toppy. Volume is good. TQQQ, we sold naked calls expiring in April, on April the 1st. At, I believe it's a 62 strike right here. Now, what's our game plan? We had an update today. We saw some pretty good price action on the S&P 500. What happens if we begin to break out? Simple. One of two things. Either we cover, take a loss, or we buy the TQQQ and we convert that naked call into now a covered call. So I'm only going to worry about that trade and putting that on if we close above $54 a share. Until then, I'm good where we're at. And take note as well, you have your declining 50-period moving average, which is moving down rapidly, which is going to act as a pretty significant speed bump if and when we break through this upper band of resistance. And by the time we get up to 62, if we do, that 50-day moving average would be in that neighborhood or perhaps even slightly lower. So I'm comfortable with where we're at right now. The banks, we have a naked call position expiring on Friday. I forget the strike. I know it's in the 120s. So I'm comfortable here. A lot of overhead supply. Volume was strong. I'm comfortable but not cocky, folks. So just to put that out there. It's still a risky trade. LABU, we are holding the naked puts. This ETF, I should say, is holding up very well this week. I mean, even when equities are down, it really hasn't been reacting negatively, and it usually trades in tandem with the S&P 500. It's holding up very nice here. So if it looks as though they're going to expire worthless, I may just roll them out into next week. Loving the breakout in RSI. Stokes looking good. We like LABU. PayPal, we sold some naked puts today. Why? It was holding support. We may have a higher low here. We sold the 102s or 103s. One of the two. I think it was the 103s. Positions that we're watching to put on Airbnb. This is a weekly chart. I want to illustrate the good price action thus far in the week. 2 trading days left to go, but right now it's looking pretty good. Bullish key reversal bar. So I'll be eyeballing this for trade going into the close on Friday if we get a ceasefire. I'm not going to open up new trades if we don't get a ceasefire because I don't want to be carrying large positions over the weekend. Oh, I forgot to go over OPTT. We own this one. OPTT up, 10% on the day. So it's beginning to pick up momentum. And this all has to do with renewables over in Europe. NVIDIA, another watch position, or watch stock. Very nice consolidation here. Possible W formation. Volume, though, has been declining dramatically. So it gives me pause. Are we going to hold the support level when we don't have a lot of buyers? Maybe we will. Not quite sure yet. So I'm not ready to buy. We'll be looking for some sort of a breakout above 246.61. Another position that we're going to look to put on, but not right now, is BCE, yielding 5%, fixed communications. I got to look into them more, but I just saw this chart. And I was like, wow, this is beautiful. And it was not the daily chart that caught my eye. It was the weekly chart. Let's bring it up. Look at this breakout on a weekly time frame. Look at these Stokes with the higher low. I'm a sucker for these kind of Stokes. So BCE looking really, really good here. So more to come on these trades. With that, folks, everybody have a great night, and I will talk to you tomorrow. Be well.